Hello, this is our weekly market alert video for the week ended June 18th, 2021. And as has happened many times in the past, we have seen the markets move based on pronouncements from the Federal Reserve Board. And so Jerome Powell, the chairman of the Federal Reserve, had a conference this week. And basically what they said is that, yeah, we told you that we weren't going to raise interest rates till 2023, but now we're talking about having a rate rise in 2022. So they're not actually talking about it. They're talking about whether they should talk about it. Okay, so they're talking about. That's all Fed speak for kids. We're considering it. And one of the things that's very interesting about how investors behave is that in many cases what happens is that good news makes the market go down temporarily. And we think that this is one of those periods. So there's a lot of investors that were investing based on the notion that interest rates were going to stay low for a while, longer than what it appears are going to. And so those people have made some money here the last few months and have decided they're going to take some profits. The thing you have to keep in mind, though, in our view, is that the profits of the companies that they're investing in are going to be marginally affected by the Federal Reserve making any changes a year from now or 2 years from now. And so this is just investors who are taking profits who had made a certain bet, if you will. So what's going to happen, in our view, and we believe it's the case, is that people are going to see this as a buying opportunity, as do we. So we think that the down we've seen this week with people selling because of the potential of rising interest rates presents an opportunity to buy in and capture potentially some gains as we head into new highs later on this year. So if you are sitting on cash and you're wondering whether you should be investing or not, we think that this is presenting an opportunity for you. Now, the interesting thing about the Fed is that, they said that, well, historically, the Fed has always been a projector, right? In other words, they projected into the future, they looked into their crystal ball, and they said, the economy's slowing down or it's speeding up, inflation's coming or not. And so basically, when you have an economy the size of the United States, you got this giant tanker that's, that you want to turn. And big ships, you got to start turning them way early, or else you're not going to be able to get it done. So their idea in the past was, let's project into the future, see if inflation is coming or the economy is slowing down, and let's act now so we can avert what's coming in the future. What the current Fed is saying is we're no longer going to do that. We're no longer going to look and be in the business of trying to forecast anything. What we're going to do is we're going to be data dependent. And so they said that they would be data dependent coming out of the pandemic. Well, everybody said, but you know what's going to happen, right? We're going to have this big gap between demand and supply. That's going to cause a lot of inflation. That's going to give you data points that say, hey, we got inflation. What are you going to do about that? And they said, what's the word? We're going to consider it to be transitory. And because it's transitory, we're not going to do anything about it. We're going to let the economy run hot. So now the economy is running hotter than they thought. And so now they're like, oh, well, maybe we are going to be more data dependent and maybe it's going to be transitory, but it's going to happen faster than we thought. So anyway, that's where it is. The point of this all, though, is that we see what's happening this week and any selling we may see next week because of the Fed pronouncements as a buying opportunity. Because the news, the reason why they're going to raise interest rates potentially sooner is demand is skyrocketing. If demand skyrockets, supply will try to fill that. Companies are going to try to fill the demand. And if they do that, what happens? They make money doing it. They make things, they sell them, and then those people sell them, or they hire more people. So all of that stuff to satisfy this demand should generate higher profits for companies, and the stock market usually is a reflection of profits, and so therefore we see new all-time highs going forward. So we could be wrong, obviously, and that's why we have our invest and protect strategy to get us out should we need to, but again, we don't think that that's going to happen until well into next year. There's a lot of room to grow still. So, good Father's Day news. I hope all you fathers are going to have a great Father's Day weekend. I have family coming in. My girls are all going to be here. I have 3 daughters. And so the third one is arriving today. Today's Friday as I record this. And so I'm looking forward to having all my girls home and enjoying Father's Day with my family. They asked me, what do you want for Father's Day? And I said, for me, the most precious thing of all is family time. That's really the most valuable thing to me. So they're all coming home for that. So it's nice. So I wish all of you dads a very happy Father's Day. And we'll talk soon.